Hi, it's Matt from EvoStar Property. In this video we're talking about where the property market might be heading for the rest of 2023 and whether we're looking at a market crash or whether the pessimism is overblown. So let's start by talking about high interest rates and the problem with fixed mortgages at the moment. So right now the base rate of interest is 5.25% after 14 consecutive rises in the past 18 months. This inevitably impacts the property market and the cost of finance and mortgages. Now, the Bank of England's idea is to quell high inflation and cool price increases, but the byproduct of this is it becomes challenging for homeowners, particularly those coming to the end of their cheap fixed mortgage period. Now, for the past decade, many people have taken advantage of low interest rates to load up on cheap debt, and suddenly, as their mortgage fixed term concludes, they're thrust into the scenario where repayments are now significantly higher. It creates a lot of uncertainty and potential financial strain for many, and it could lead to defaults and even repossessions as people have to pay hundreds of pounds a month more to service their debt. The knock-on effect of high interest rates means it affects people's affordability, so they can borrow less. And it often leads to people battening down the hatches and avoiding making a large new purchase. Now, having said that, the property market is not crashing down, and why is that? Demand. There's a huge amount of people still looking for homes, and that demand fundamentally props up the market to some degree. We're more likely to see a softening of the market rather than a deep crash as the supply increases and the demand drops off slightly, just due to the high finance costs. Now, let's talk about the strategy of flipping properties. In a booming market, it is easy. You buy a property, make some improvements and sell for a profit. But in a downturn, this becomes more challenging. When the markets cool down, lenders often get cautious. They downvalue properties and they try to shield themselves from potential losses. So if you're highly invested in your renovations and upgrades and you're expecting a high return, a down valuation can be a tough pill to swallow. Combine that with high finance costs, the overall profitability of flipping becomes dented, the margins are thinner and the risk is higher. I'll be seriously wary right now of taking on an expensive bridging loan or development finance. Anything that depends on a high valuation on the exit for the deal to stack up. You've got to be cautious and always have a plan B. Now, looking ahead, as we approach the winter months, things start to get interesting. The days are colder and wetter and darker, and often that's reflected in our pessimism. I predict this winter, when the spirits are low and the market's mood will probably echo that. So it's during the winter months when some of the best opportunities will emerge. So sellers will be more willing to negotiate, discounts will become more available, frequent, and in that scenario then cash will become king. For those that are prepared and in the position to act, there'll be the opportune moment to make significant moves in the property market as the market finally swings back to a buyer's market. So while the property market for the rest of 2023, it's got its fair share of challenges, but it's going to offer opportunities for the vigilant and the prepared. Protect the downside and mitigate the risk. Positive cash flow is critical, and you should be looking at high cash flowing business models such as serviced accommodation. Thanks for joining me, and I'll see you on the next video.